A leading economist from the government of St. Lucia provided a sobering analysis of the factors driving the region's inflation crisis at the Regional Economic Development Symposium here in October. JANAI LEONCE, chief economist at the St. Lucia Ministry of Finance, outlined how the COVID-19 pandemic has dramatically impacted inflation trends in the Eastern Caribbean.
If you look at inflation over the last 20-odd years, the price level has actually increased by almost 53% over those 20-odd years. So the price of a typical good or service now is almost 53% higher than it would have been 20-odd years ago. And that increase, you would note, prior to 2020 was largely in the region of 35-37%. But between 2020 to now, we have gone from 35% to 53%.
Leos explained that prior to the pandemic, inflation in St. Lucia and the OECS region had been on a downward trajectory. However, the supply chain disruptions and demand shocks of COVID-19 reversed that trend.
I wanted to briefly explore what would St. Lucia's inflation have looked like if we did not have a pandemic. And the purple line in that blue area there is showing what the rate of inflation could have been if you assume that the trend that you had observed over the last 20-odd years remained the same. And you're seeing that inflation would have followed that sort of downward trajectory that we are seeing when we look at both the regional and St. Lucia's inflation as well.
The economist noted that even without the pandemic, factors like weather-related shocks and military conflicts could still impact future inflation.
The most recent data point for 2024, if we look at the first 6 months of the year for 2024 and we compare it to the first 6 months of 2023, we are expected to see some deflation. Next slide. So in this slide, I'm just showing what would have been the trajectory or what could have been the trajectory in the purple line without the effect of COVID. And you are seeing that had there not been that shock, and had we continued at our long-term trend, you would have seen a relatively stable price movement. As again, if you look at the 2014 inflation, cumulative inflation should have been around 34%.
However, he expressed cautious optimism that the rate of inflation would moderate in the coming years.
The expectation for inflation is to moderate, and this is the inflation rate. So the expectation is that and this is from the IMF, that from the high of 4% that we saw in 2023 to fall to 1.2, 1.3%, and to sort of moderate over the next few years.
Leonce outlined measures taken by the state to cushion the blow of the historic global inflation.
We would have recalled the subsidization of flour and wheat, the increase there for the bakers, and also similar increases in the subsidies for sugar as well. And you would have recalled concessions to the public service and also concessions to government workers as well, and the PAYE reform, which was meant to boost disposable incomes as a response to the shock.
Regional policymakers are grappling with the fallout from the historic inflation surge, which has eroded consumer purchasing power and strained government budgets. Symposium participants are exploring strategies to build economic resilience and shield citizens from the cost of living crisis. Joachim Duplessis, HTS News Force.